The Mortgage Bankers Association is the only organization representing all segments of the real estate finance industry, including commercial, multifamily, and residential. With us today is Jamie Woodwell, Vice President of Commercial Real Estate Research at the Mortgage Bankers Association. Jamie, thank you very much for being here.
Oh, my pleasure. Thanks for having me.
To get started, Jamie, tell us briefly about the Mortgage Bankers Association. What's your purpose and function?
Yeah, sure. So thanks again for having me. MBA, the Mortgage Bankers Association, is a trade association representing all of real estate finance. And so we put on conferences, meetings for folks to get together to sort of learn, discuss hot topics. We have a whole education program. I'm in our research and economics group, where we do studies, surveys, put out research and analysis. We track policy issues, lobby, just sort of the whole range of services and activities to support the industry.
Mm-hmm. Headquartered in Washington, D.C., how many members do you serve?
We're in Washington, D.C. We've got 1,900 member companies. And so then the employees of all of those companies are really members as well.
Sure. So it numbers into the thousands, obviously.
Absolutely.
Is education your primary mission?
It's a very important part of what we do. We have an entire group that puts on courses, whether it be in person, through the web, webinars, other things, to try and help train the industry from people just coming in who are learning about the industry and what jobs they're doing, on to senior executives who are sort of getting an extra little polish through some of it.
Indeed.
So it's a really, really neat set of programs.
Great courses, great instructors.
Absolutely.
Do you have active policy, or maybe put a different way, do you have active political issues that you follow?
There are just a whole slew of different policy issues, whether they be legislative, regulatory, affecting different products, different capital sources. If you can probably imagine that over the last 2 years, there's been an awful lot of work on the federal response to the pandemic. So yes. NBA working hard on that. Other policy issues you might see us working on are anything from the lending caps for Fannie Mae and Freddie Mac on the multifamily side to climate risk and ESG as important topics that are getting more and more attention.
What is ESG?
So environmental, social, and governance. So a whole brand of issues that investors are looking to companies to sort of see what they're doing in addition to their business activities. What sorts of impacts are they having on the world, either on the environment, through different social issues, or in their governance? So increasingly a topic that lots of companies are working on to sort of figure out what path they want to be on in that space.
As we all know, the real estate market is at or near record levels. How much longer can we expect this growth in the market to take place?
It's sort of hard to know. And one thing we're seeing in the markets right now is that really every property type is its own story. That whether you're talking about office or apartments or industrial or retail or hotel, each property is in a slightly different trajectory. They all sort of went through the beginning days of the pandemic slightly differently, and they're coming out in different paths as well. So I think you really need to look at each individual property type to figure out where it is. Industrial and multifamily are without a doubt the two hottest property types right now. The fundamentals there are just off the charts. Lots of demand for the space. As a result, developers are coming in and adding new space, and you're seeing property values climb there as well. Office, retail, hotel, they all have slightly different stories. They're not seeing quite the same growth either in values or transaction activity that multifamily and industrial are, but they've certainly picked up a great deal from the sort of early days of the pandemic.
And what's driving this level of activity?
I think it depends what part of the market you're looking at. So if you're looking at, for instance, transaction activity, sales and financing, mortgage financings, those we've seen historically have been very much tied to property values. And when you see property values high and increasing, you see a whole lot more transaction activity. And you definitely see that today with, again, multifamily and industrial, where you've got extremely strong price growth, multifamily up about 18% in property values over the last year. And the third quarter, we saw record levels of sales transactions and mortgage origination. So that part of the market, I think there's some pent up demand maybe that you're seeing, but even more so, it's just driven by the fact that those property types, the fundamentals are doing great, and the property values are really driving that activity.
Jamie, it appears the general economy is strong, and maybe even too strong. Inflation is reportedly 6%. Some are saying it's ranging up to 10. What type impact will this have on the commercial real estate market?
Yeah, it's a really interesting thing, and there have been debates through the years about whether and how commercial real estate is a hedge against inflation as an investor, because to the degree you've got a strong economy and prices are going up, that's generally also going to mean that rents are going up. So depending on the lease structure, those might come immediately in self-storage or multifamily, or through increased sales, retail, or hotel, or they might come more slowly in a longer lease term, like an office. You do have expenses on the other side. So to the degree those expenses are being pushed up by inflation, that can take some of the edge off the benefits of increasing rents. But I think one would expect that the overall increases in prices, you will see some of that translating to rents as well, and that being a general benefit for the commercial real estate properties. With the one caveat that again, each property type is in a really interesting place right now, and what'll be happening with rents, while they might be sort of in some ways related to or going along with what you're seeing in other prices, they'll fundamentally be driven by supply and demand in that property type.
Is inflation expected to continue upward in the near term?
We're at a very strong pace of inflation right now. So it's likely that we won't continue at this pace of inflation, but we are likely to see inflation running ahead of sort of that 2% target that the Fed and others have. So while the current pace of inflation is really literally off the charts, we're at record levels for some of the different measures, and we're not likely to see these same levels of inflation remain, but that doesn't mean that we won't still be running at a good pace of or an above trend pace of price increases.
Well, is there an acceptable range of inflation that the economy and the Federal Reserve finds acceptable?
That's sort of what the Fed has pegged when they look at the inflation levels and unemployment rate. They sort of have a 2% inflation rate and a 4% unemployment rate as what they expect the market to be in over the long term, and sort of what they're shooting for. So we're definitely running hot on that on the inflation front, compared to where the Fed would like to see us long term. And on the unemployment rate, while the unemployment rate hit 14.8% during the early days of the pandemic, it's now down to 4.2%, sort of as of October, November, and really just about at that long-term goal that the Fed has.
Does high levels of inflation have a bigger impact on commercial real estate than other segments of the economy?
Not necessarily. So you think about the values, it's going to be driven by two pieces. One is the income that a property produces, the net operating income, and then the other is the capitalization rate, or essentially the factor that investors use to value that income. A rise in inflation, again, all else being equal, can actually push that NOI up a little bit higher if some of that that is tied to rent increases, which we're seeing in many parts of the market. So the question then becomes a little bit, if higher inflation or interest rates, if that affects the cap rate and the way investors are valuing those properties. And again, a lot of papers looking at interest rates and cap rates, and not a lot of solid conclusions there about what
Sure.
the relationship is.
One more question on inflation, because it is so important to any level of stability in our economy. Who has a responsibility to fight inflation?
Right. So it's the Fed has it as part of their mandate, is to keep an eye on inflation and try and keep it towards their goal. That being said, there's also, in addition to the monetary piece, there's the fiscal piece, and you do see with more government spending that can put upward pressure on inflation as well. So we're seeing a point right now where we've had an awful lot of government spending that helped get us through the pandemic. That also clearly was giving households the resources to go out and demand goods and pushing prices up.
But at the same time, that can be inflationary, correct?
Absolutely. So that's pushing those prices up. At the same time, we've had the supply constraints caused by the pandemic. So you've been in a little bit of a pincer move with both of those now putting us in the place where we're seeing the rise in prices we've been seeing.
Yes. Reportedly, the U.S. economy has more than at least 10 million open jobs, and combined with that, record level of employees leaving or resigning, quitting their jobs. How is, or will this impact the commercial real estate market?
I think in a variety of ways. One is just talking to a whole range of players in the commercial real estate market who are looking to hire and are out there competing in those job markets every day. So that's maybe the most immediate impact. The second piece would be that all of that employment growth, all of that demand, those employees need to be someplace, and so you're seeing that either in affecting the housing market when people are working from home. You're seeing that in the office market as folks are coming back into the offices. So really dramatic impact in that strong labor market and how that's affecting commercial real estate. The one other piece I'd throw out there is that's another element of the strong demand for labor is leading to solid wage growth, which then prompts retail spending, which prompts spending on housing, and again, the return to office space. So lots of different ways that the labor
lot of
market
moving parts,
is
aren't
affecting
there?
us.
You commented earlier the multifamily market is strong. Are we close to a point of overbuilding in the apartment market?
So we've got more multifamily units under construction right now than we have at any time since the mid 70s. Just an incredible amount of construction activity taking place. We put together a chart of the week just a little bit ago, where the headline though was that the U.S. housing market is full. That if you look at vacancy rates and for renters, if you look at vacancy rates for homeowners, both of those markets are at levels that we haven't seen, in half a century for multifamily and ever for ownership. So while we do have a lot of construction taking place on the multifamily side, we also just have gargantuan demand right now that's soaking up all of that and some. And
so that's driving higher rental rates. But at what point, using that old economics term, is there a marginal propensity to consume? At what level do we hit that all of a sudden there will be a sudden shift and there'll be a lot of empty apartments around.
I think that's the question of is if there's a sudden shift. I think that's what markets are always working on, right? Is to find what's the balance between prices and demand. And so we're seeing the market working through that at present, where again, lots of very tight markets and lots of competition from property owners to try to attract that last tenant to their space. So right now, because of that huge demand across both ownership and rentership, we're seeing very tight markets, and with low vacancy rates tend to come greater rent increases.
Sure.
But we do see the development cycle trying to respond to that with all that building activity.
These things always run in cycles, don't they? Does MBA have a read on the impact, either current or recently affected the rent moratorium? Did that have a devastating effect, or are we still seeing that out?
Yeah, I think what you saw during the pandemic was a whole host of different things. And I think of it as there was a waterfall of federal support for households that helped households and the rental market as a whole. And you can start with stimulus checks and the Paycheck Protection Program. You then have the expanded unemployment benefits. And then eventually you had direct rental assistance. All of those did just a phenomenal job of keeping households with the resources they needed to meet their shelter, food, and other needs. So when you look at what happened during the downturn, there are great numbers from the National Multifamily Housing Council and the Urban Institute using data from Avail that show there was just a small decline in the number of renters making their rent payments each month. And again, that's with a 14.8% unemployment rate.
Yes.
But all of those federal resources really kept the market intact. And so as a result of that, I think some of those other backstops that were there, whether it be an eviction moratorium or other things, weren't really called on nearly as much as one would have expected, again, because of all of the success of that other federal support.
Well, that's certainly positive. COVID apparently had a pretty large impact on the office labor force moving home or working from home. What do you think of the long-term impacts of that on commercial office space?
Yeah, that's a great question, and I think it's one of the top cocktail conversations one has these days. Is just that question about the work from home, the return to office, how that's all going to shake out. And I think it's still in a lot of ways too early to tell. That companies are working through it, trying to figure out what works best for the company, for the employees, the whole range. The one other thing I might posit there is that every city is different, that you've got a very different situation in San Antonio than you do in New York City. And then even within the city, every property or submarket probably has a slightly different story. And then every company within those properties has a slightly different story. So we tend to try and solve for everyone responding the same way. I think for office, you've got so many variations there that we're going to see it play out in a million different vignettes of different companies and how they're doing the return to office.
Mm-hmm. Well, one of the drivers of the economy and certainly real estate, commercial real estate, are interest rates. And do you think that we'll see rates remain at current levels for at least the foreseeable future?
Right. So, as we're talking, the Fed is actually meeting, and expectations are that they're working to try and increase the speed of their tapering, which sort of has been affecting longer term rates, so that they'll be in a position early in 2022 to start increasing the shorter term rates through the Fed funds rate. So expectations are that without a doubt that shorter term rate will start coming up in 2022 as the Fed starts to act with the Fed funds rate. For longer term rates, I think our expectation is we are going to see them sort of ramping up slowly over the next couple of years, but nothing too dramatic. The path has been, economists have been expecting the longer term rates to be nudging up sort of every year for the last probably decade and a half, and instead they've gone the opposite way. But given what we've been talking about on the inflation front and the shorter end of the curve nudging up, I think probably a pretty safe bet that we will see some increases on the longer end as well.
We just have time for a couple more questions, Jamie, and that your comment on the Fed, I think, is an interesting one. I'm wondering, why has the Fed been so committed to keeping interest rates at these record lows for such a long time?
Right. It's a great question. I think the Fed sort of balancing that dual mandate of prices and inflation on the one hand and unemployment on the other. And the concern, which makes a lot of sense, has been dominated more by the unemployment. And, with the pandemic, the uncertainty of that, having seen the unemployment rate go to 14.8% and until recently still being elevated from that sort of longer term goal that they've got, there was much more attention to that, particularly as the thought was inflation was still just reacting and sort of compensating for the drops in inflation during the early days of the pandemic. If we were running a little hot, it was just making up for that. I think that perspective has changed dramatically, and the Fed now sees the unemployment rate just about at their target and inflation not at their target. So they've appropriately moved from focusing on one of those to the other.
Jeremy, I'd like to ask you in closing to look into your crystal ball and tell our viewers what you see. How the economy in general and real estate in particular unfold in 2022?
The crystal ball is always a dangerous thing to pull out, but I think if we look at it, we're carrying a lot of momentum out of 2021 and into 2022, and I think you're seeing that in the economy and you're seeing that in commercial real estate. When you talk to lenders, there is just an incredible appetite out there to put money to work in commercial and multifamily mortgages. Mm-hmm. So I think you're going to continue to see strong appetites from lenders to lend, and that's mirrored by equity investors who have a strong desire to put their cash into commercial real estate equity deals as well. So all of that, I think, is a pretty strong sign for sort of the investment side of commercial real estate. And then we talked earlier about the fundamentals, that each property type is in its slightly different place. Generally, the trends for all of them are in the positive side towards growing incomes and improving fundamentals. Sure. So I think a pretty positive picture.
Well, that's good news indeed. That concludes this episode of Stringham Real Estate Edge. Today's program was brought to you by Stringham Schools, educating real estate professionals since 1989. Visit stringhamschools.com to learn more. We want to thank today's guests, and don't forget to tell us what you think in the comments section below. I'm Gary Barnes, and I'll see you on the next episode of Stringham Real Estate Edge.